Alright guys, Gen Z Reicher here, and today we got a portfolio update video, and I am not proud of it. We got paper hands, as the title suggests. I'm not exactly shaken up. I tried making this a strategic exit. And unfortunately, we didn't sell up here. We sold down here. We sold 1,500 shares of Coney, which was worth about $17,000 to $18,000. I'm not proud of it, but I'm making this video because remember, guys, I make YieldMax videos, but this is still my financial journey. I'm documenting my journey, and if I didn't, report or document this part of it and try to brush it off, it wouldn't feel authentic. But anyways, I tried to make a strategic exit. Honestly, I might have not exited my position assuming an incident didn't happen, because around this time I was on Robinhood on my phone, and I was at that slide window where if you slide up it executes the order, and I was contemplating selling or not. I was thinking it through, and then I tried to swipe up away from Robinhood, but instead it executed the order. And so that was really an accident. But I was on that screen and I was thinking, all right, so market's going down. Bitcoin was literally at $90,000. If it kept going down and broke support at 90,000, it could keep going way more. And everything came back up today, but that doesn't mean things can't keep going down again, all right? So only the future will tell. We don't know yet. But I was thinking at that time that if the stock market and Bitcoin kept going down, bringing Coney down, I would rather have $17,000 from my sale in Coney on the sidelines rather than going down. And if the market kept going down, I got $17,000 to invest into msty. Because as a crypto play, I would rather have msty over Coney, just because there's so much more volatility and whatnot with msty. We were previously 72% leverage, and currently we are, I guess, 59% leverage on our portfolio in margin. Buffer is not bad, 48%. We got a total of $53,000, and still following Oracle, our margin ratio is good because we can use more margin than buffer. We can look at our tracker, and as you can see, so pretty much, well, we need to turn this from 2,500 shares to 1,000 shares. And so we were making 10,000 a month, and it's now $8,500 per month. So we're below the five figures again. But again, guys, this isn't the end of the world. Either two things can happen, guys. So either the CPI on Wednesday comes out and it shows inflation is high or it's coming back. If inflation is coming back, then they're likely not cut rates anymore. And if that happens, then the market might tank and keep going down. Now, that's the best situation for me because I got $17,000 on the sidelines from the Coney sale, which I can deploy back into msty as a crypto play. On the flip side, if the inflation data shows inflation is coming down, then that leaves room for possible rate cuts. And if that happens, the market might rally, meaning I basically sold out, which was mistake number one, and mistake number two was not being able to buy the dip. So I just have cash on the sidelines now. And you can already see right here, even from my previous videos, you guys already seen this. No more Coney for foreseeable future. Coney wasn't doing good with their trades previously, and if we can go to Coney on the YieldMax website, and unfortunately they paid a very low distribution last time, 83 cents. If we start looking back, they never paid anything under $1 until last distribution, so they aren't doing really good. Hopefully opportunity opens up for me, because if it does, we're putting that 17,000, maybe not the entire 17,000, because I'm weary about the crypto position. If opportunity opens up, we're going heavier into msty. We're going to need that higher yield to boost up this back to $10,000 per month. Some more self-reflection. So I'm probably going to need to teach myself, probably not technical analysis, but how to read a basic chart on these stocks. Like at the bare minimum, I think I should be able to read and see where the support and the resistance is. That's something I don't know how to do, and it's something I should probably put some time into learning. It could be as simple as looking at the 200 day moving average and whatnot, but we need to be able to read something super basic. You can see right here, I'm on the safer side of the spectrum. We got the distribution last week of $2,700. We only used $400 so far on these safe stocks right here. and we got $2,200 unused. So that's just staying as buying power for now. We didn't actually deploy all of the money. And this chart, you guys remember I updated my reinvestment allocations. So for every week that I get paid from YieldMax, 4% goes to margin pay down. So we plan to use 67% of the whatever this value is every week. So on last week, we would have used $1,800 of the $2,700, reinvested it back into whatever the X day stocks were, depending on what I like. 6% and 8% to YMAX and YMAG. This is in green because it's showing the safer, I guess, income funds. You know, JEBQ, SPY, QQI, XDTE, YMAX, and YMAG. These are more NAV stable, more stable than the individual YieldMax ETFs. If it's purple, it means I use. So it means I spent money buying these already. So we didn't add anything else to YMAX and YMAG. Someone brought it up on the Discord also that unfortunately, and this is my mistake too, because I bought in so quickly into YMAX and whatnot, I can't really dollar cost average anymore. Because look, I got 5,000 shares and that's worth, according to my spreadsheet, it is worth costed $98,000. So it would take tens of thousands of dollars just to lower my price average, which you would be able to see down here on Robinhood. To lower this, I can't spend 1,000 or 3,000. I need to spend probably 10,000 and plus to lower it substantially. So yeah, if I, want to throw in 500, 1,000, it's not going to dent much into that. But yeah, that's pretty much the update for today. So yeah, all I can do right now is look for the CPI inflation data, and either the market sees possible rate cuts, meaning the stock market rallies, and then I missed out by selling out on Coney, or the CPI ends up being hot, meaning that inflation is coming back, no rate cuts, and then the market ends up tanking. If the market ends up tanking, that's good on us because we got the money on the sidelines now. Alright guys, if you made it this far, then thanks for watching. The video wasn't too structured. I was just trying to make an update on my portfolio.